The stock market crash of 2008 compared to the 2022 stock market and cryptocurrency crash. That is the point of today's video. And what are the similarities and how are they the same? Because I saw this video and we're gonna watch this together. Shout out to Danny Cheek from YouTube, because this video is extremely important and it shows you the history of the stock market crash in 2008. And we're gonna take a look at today in 2022. How far have we gone down, and can we go down more, or have we seen the worst? Because we're gonna take a look at the Dow Jones. This is the Dow Jones. We're gonna take a look at the New York Stock Exchange and the NASDAQ. So, also, we're going to take a look at the cryptocurrency markets, because crypto was not even around back in 2008. So this is the first true big recession that cryptocurrency has been going through. So first things first, destroy the like button, subscribe if this is your first time here, and let's watch this video. Again, shout out to Danny Cheek on YouTube. But now, if you're looking for a place to keep your cryptocurrency safe, you will love this decent hardware wallet. Yes, this uses your thumbprint to get in, and it has a big screen so you can actually see what you're doing on this cold hardware wallet. Now, the buttons are also very big and you can actually know what you're doing. It connects to your iPhone and your Android, and this holds thousands of cryptocurrencies to keep your crypto safe. It is also extremely secure because it has a seed phrase and it uses your thumbprint to get in. So what are you waiting for? Make sure you get one using the links down below for a 33% discount, or get the 2-pack for a 40% discount. Thousands of you already got this decent hardware wallet, and if you have not yet already ordered one, what are you waiting for? You will love it as well. And now back to the video. Let's see how the stock market crash of 2008 was and how does it compare to this year. Let us do it together. Sit back, relax, and enjoy.
Apple's up more than 6% right now. Google about 3%, but Dell, Intel, Research Motion, and Microsoft are all to the upside. Look how strong. Most of the techs this morning, if not all of them, have just exploded.
So first things first, at the very beginning, everything was looking good. It was looking sunny and rainbows and sunshine, but then September 29th, 2008 came. And that's very ironic because today, as I'm recording this video, is September 28th, and tomorrow is September 29th. So this could be a foreshadowing of what's to come tomorrow. But look at what happens.
1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%. We're down over 16%. Dow at the same time has fallen about 18%. The stock market is now down 21%.
Because we're now down 43%.
43%. We're not anywhere near that yet, so I believe we still have a long way to go, and I'm going to show you why at the end of this video. Watch this.
What in the world is happening on Wall Street?
2-year note yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out. It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world, the opening bell is going to ring in 5 seconds, and to be honest with you, we wish it wouldn't.
If you're working at home today, a lot of their customers are freaked out, waiting to see how low.
Look, the Dow Jones is down about 7% in one day alone. We have not yet seen that carnage, that capitulation in the markets yet. So it's coming, possibly.
The Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure. Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%.
And we're not getting the bid wanted. We're not getting the stock trading, and we see where the buyers are. We're just every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance
and further increase the risk to growth. Can't look at it after you buy it. It's so horrible.
We've had an 8-day losing streak in the Dow that in percentage terms puts it on par, close to the loss suffered in that crash in 1987, close to that percentage loss those 2 days in 1929.
And we're going to compare this crash so far in 2022 compared to 2008, 2000, 1987, and a lot more. So keep watching.
In America last year has now spread to every part of the world.
We're down 9% today. The Xetra DAX over in Frankfurt is down by 9%. The Paris market down by 9%. Austria, which was briefly suspended earlier on in the day, is down by nearly 11%. This market...
So 9 to 11% in one day. Like, that's crazy. We have not yet seen that.
Is as volatile as you'll ever see.
Traders say this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil prices so fast, so fast.
Seconds ago until the start of trading at the New York Stock Exchange, and stocks are set to kick off lower, a whole lot lower.
eBay is down 6.5%. Really, you're...
Wow. So that was crazy. And so far in 2022, we have companies like Microsoft, which is down about 30%, Google about 32%, Meta, which is Facebook, is down about 60% from the beginning of the year. Apple is down about 15%. But let's take a look at the overall indexes and how does that compare to the previous crashes? Because right now, the Dow Jones, as you can tell, I drew this blue line from the very top to the bottom. And if we calculate it, it's about a 21% drop for the Dow Jones Industrial Average. So 21% seems like it's a lot, but compared to the COVID crash that we saw about 2 years ago, we went down about 38%. So 38% is a lot more than 21% that we are seeing right now. And then in 2008, as you can tell right here, we went down a historic 55% almost, 55%. So that's more than double the crash that we're seeing right now in 2022. And then in the year 2000, we had a drop of about 39%. 39% is way more than 21%. And then if we go back to 1987, we will see that this crash right here was a crash of about 41% compared to 21%. So that's a lot worse than what we're seeing right now in 2022. So I believe that we still have more room to go down for the Dow Jones. Now let's take a look at the New York Stock Exchange. The New York Stock Exchange right now is also down about 22%, as you can tell right here. But compared to the COVID crash that we saw about 2 years ago, we went down about 39%. So 39 again is way more than 22%. And then in the year 2008, we went down about 59%, almost 60% that year, literally. So that's about triple the fall that we're seeing right now. So 60%, absolutely crazy. And then in the year 2000, we went down about 38.5%, as you can tell right here. So basically, all of the crashes that we've seen in the past 20 years have been way worse than what we're seeing so far in 2022. And that is why I believe we have more room to go down. But let's take a look at the NASDAQ to see if it's telling us the exact same thing. And sure enough, it basically is. Actually, the NASDAQ is showing a little bit of a different story. Like the COVID crash for NASDAQ about 2 years ago went down only about 33%. Right now, we're down about 35% for NASDAQ. So that's a little bit more. But why do I say we can go down more? Because if we take a look back in 2008, the NASDAQ fell about 56%. So 56% is way more than 35%. And then the big crash for NASDAQ came in the 2000 dot-com bubble crash. And we went down about 78.5%, almost 79%. So that's way worse than what we're seeing right now with the 35%. So that's why also on the NASDAQ, we have some room left to go down. Now, what's really important is cryptocurrency, in my opinion, because we cover cryptocurrency a lot on our channel because we believe that crypto is the future in many ways. But right now, cryptocurrency is going through the first ever major recession. Like if we take a look at the Dow Jones, yes, crypto was around in the year 2020 when the COVID crash happened, but in 2008, crypto was not around. It was not a thing. In the year 2000, crypto was not around. In the year 1987, crypto was not around. So cryptocurrency is a relatively new asset class. And right now, we can just compare it to the previous crashes that crypto went through. And cryptocurrency right now is down about 75%, but compared to the overall crypto market, because this is the total cryptocurrency market cap. This is not just Bitcoin, it's not just Ethereum, this is all of crypto combined. So basically it's like the Dow Jones of cryptocurrency. So in the year 2018, when we saw that big crash, we went down about 88%. So 88% is way worse than 75%. And again, this is the first ever major recession that cryptocurrency is going through. So if the Dow Jones, if the New York Stock Exchange, if the NASDAQ keep going down, obviously it's going to pull down the cryptocurrency market with it. So that is why the stock market crash of 2022 is nothing like the market crash of 2008.